Good morning. Today's trade of the day is cable, and we have seen a certain amount of weakness in the pound in the last number of hours. A lot of this down to the fact that the GDP for the first quarter was not actually revised upwards. So a certain amount of weakness, particularly in the construction sector in the UK, and saw it actually grow at its slowest pace in 12 years. Now, we would expect that the second quarter of growth will be an awful lot better, mainly due to consumption, particularly in the retail space, and that will be down to the deflationary environment that we're currently settling in. When we go to the chart, though, it is a very interesting picture, particularly the 4 hours, where we can see the emergence and the completion of a head and shoulders pattern top, which could, if we see a break below the 153 level, head back towards the 151.60 level. So here is the chart, and we look at the targets from here. Okay, so we are currently resting on this 200 period moving average. Again, that resides around the 153 metric, which has formed quite a nice supportive level over the last number of days, certainly since the 25th of May. So the last 3 days, it's been quite useful. If this actually breaks and we see a close below that, we'll be heading back to these lows here around the 151.90 with an extension on the Fibonacci extension there to the 151.80, which would be, as I said, the 100% extension of this head and shoulders pattern top. Maintaining the support around the 153 does imply, though, that we could actually see a rally back up to the 153.50 level, and I would expect to see a certain amount of consolidation around that particular point. But the bias is at the moment, certainly from the fundamental perspective in the short term, to the downside.